What's going on, guys? Welcome back to our second video of our intermediate guide. Today we'll be talking about the hammer method and the hanging man method. They're pretty similar, so the video shouldn't take too long. So let's jump right into it. As you can see, this candlestick formation looks like a hammer. You got the handle right here, and you got the hammer head right there. So that's why we call it a hammer, just because of the look of it. But it's specifically called a hammer because of the placement of this candlestick. If you look here, we got a downtrend, and then we have the candlestick, and then we got an uptrend after that candlestick. So when it's at the bottom of this trend reversal, it's called a hammer. Now, the reason why the hammer looks like this is because of the price action starting up here. So it opens at this top line. The price starts to move around in this area, comes down to the bottom wick, and gets rejected. Now, the reason why I was moving down is because, as you can see, it was a downtrend, right? So the bearish means downtrend. The bearish traders were in control of the market for the most part. So they're pushing the price down, it reaches here, and then the bullish, which means uptrend, the bullish traders take control over the price at that moment and push the price all the way back up here, and it closes. So that's why we have this tiny little hammerhead, or a tiny little candle body. That's why we have this very long lower wick. Now, it's pretty important to know that if you have this body, tiny little body, and long wick down here, and in most cases no upper wick, but it's okay to have an upper wick as long as it's not as long, or maybe I'd say about 3/4 as long as this lower wick, then that indicates a hammer body or a hammer candle. So when that happens, as I told you, the reason why the price got pushed up is because of the bullish traders taking control. Now we look for our second indicator, and our second indicator will be the next candlestick. If it closes above the open price of this hammer candlestick, then it is true the bullish traders have taken over. So that's the way you figure out if the trend is going to reverse. You look for your hammer, and you look for the next candlestick to confirm that indication, and now you have that upper trend. Let's go ahead and look at a hanging man. So we got a hanging man up here. This is also another hammer. You can see the trend reversal. You can see the body of the candlestick. You can see the wicks. This isn't as long, or not nearly as long as the bottom wick, so it's a good hammer. In this case, as you can see, it's the same concept. Price opens here, gets pushed, moved around, reaches the bottom, gets driven back up, closes right there. We call this a hanging man. Now, in this case, I don't always like to go by the hanging man to figure out if the trend is going to reverse, because, like I said, the reason why it gets pushed up is because of the bullish traders taking over the market. And when bullish traders take over the market, normally you see a bullish trend, which is an upward trend. So I like to mostly pay attention to this next candlestick, because in a hanging man method, when this candlestick, the next candlestick closes below the open of this upper candlestick, it lets you know that yes, now it is on a downward trend. So it's really that second candle that confirms your prediction, or confirms the indicator. So let's just look at another one, see if we got one more. All right, so here we got a really good hanging man. As you can see, the price started out here, down here, since it's a green candlestick, got moved around, came down here, and still got rejected upwards. Closed up here. So as long as this second candlestick price closes below the opening of this candlestick, everything is good. And then you see it's also on its downtrend after its uptrend. So that's perfect. So things to remember about hammers and the hanging man. When it comes to hammers, you want to see the next candle price action closing above the open of the hammer candle. And when it comes to hanging man, you want to see the next candle closing below the open price of the hanging man candle. Those two things will let you know that that trend is going to continue, or the trend is going to be reversed. It lets you know that either the bulls have the market or the bears have the market. Even though this is mostly a bullish indicator, it will also show bearish reversals. But be careful with the hanging man, because in some cases it will show a continuation of the trend, and that's why I stress that it's that second candle, or the candle right after your hanging man or your hammer, that lets you know if that reversal is true in this case. So I appreciate y'all for watching. Y'all like, subscribe, comment, and we'll have some more videos coming out very soon.